we all get into the stock market not realizing what perils we put ourselves into by not really analyzing the risk. I think I have done the same mistake of just getting in with the hearsay that I hear from other people that stock market is a good place to invest in the long term without realizing the hidden charges and the other aspects of what I should take as precautions so that I can really flourish and actually get the best returns out of the market. So we have our in-house expert Ram again back with us. So he is here to enlighten us with what are the basic things like a dumb guy like me who gets into the market can learn to get forward and make sure that they survive the huge shark called the stock market. So good evening, Ram. How are you doing?
I'm doing excellent, Gren. Thank you. Welcome viewers in and around India and the world. Good evening to everybody.
Great. So Ram, as I told the audience today, I think the biggest issue with people who are new at the stock market is that they really miss the finer aspects of what is in the fine print, as they call it, right? So we tend to look at the larger picture saying, okay, stock market is a good place to invest. We can go and put in our money and get good returns. And then we find that at the end of the day, that's not actually always true. There are certain things we need to really handle properly so that the returns can really come. So can you walk us through the basic precautions you think a newcomer should take?
Really true, Gren. I would definitely touch upon it. Viewers, first, before going into the stock market, I would like to talk more about a little insight about the investments we have. So, what are the investment tools we have? Basically, we have real estate. That's the first point. We all think that is going to we are going to invest some money. Second is gold, the yellow metal, which is very very famous in our country. The third is fixed deposits and other debt instruments like post office deposits and other things. And the fourth one is, of course, our share market. So, what do we find in these four? See, we always tend to say that real estate is doing very good where the land appreciates and everything. I do accept. I never deny the fact that real estate is a good part of the investment. But viewers, let us understand if you're going to real estate, the money you're going to pull in is huge. You will not get a small place for a very meager amount. So when you're going to go to the stock, that's to the real estate or to the real estate, you're going to invest a lot of money. So you're going to take almost half your almost a complete savings and you're going to put it into one place. And if it's going to stay with you for some time, say 10, 15 years down the line, it's going to appreciate. But immediately there are times where real estate market is also crashed. For example, the pandemic, the best example we can say. After the pandemic, all the real estate companies which were building huge projects of villas and apartments across India had a huge inventory lying with them. So many flats not sold. This is what we are seeing in everyday's paper. So the market just crashed. These fellows just wanted to liquidate their inventories and just walk out. So there are times where even real estate can crash. It's not that in the short term that real estate will give you a good return. The second instrument we're talking about is gold. Again, fluctuations. Gold, again, in the long term, yes, it is a good investment, but in the short term, it has its own risks. So again, we are talking about some risks connected with the investment you're going to make. And again, gold also, you're going to invest huge. So you're going to invest 5 or 10 lakhs to get a small piece of ornament. You're not going to get a good ornament at a very cheap price. And talking about FTs in banks, we always say FTs are the safest, banks are the safest. The best example I can give you is Lakshmi Vilas Bank, which happened a few days back. Banks crash, DBS had to come over, take it up and tell, okay, guys, I will honor the commitment given by LVB. And another example which I can give you about the banking sector is the PMC Bank, which again crashed in Maharashtra and Punjab. Again, still that's still undergoing a problem where a particular person has shown interest today only. So see, even banks are prone to crash today. So you can't say that my deposit is safe. What happened when LVB crashed? The RBI told we put a cap of 25,000 rupees a day you can withdraw, not more than that, or weekly 50,000 rupees, and deposits cannot be withdrawn. Finished. So what happens to your deposit then? You're caught in the midst of whirlpool till some buyer is, till some person comes, shows interest, takes it, and he liquidates your deposit. So even today, deposits have their own risks. Why I'm talking so much about all these investments is we always say these investments are safe when compared to the stock market. This is a wrong myth which we all have. Every investment has got some particular risk involved with it. These are the risks which we always talk about. So when you talk about real estate, there's a crash. When you talk about gold, there's a variation. When you talk about fixed deposits, banks are doing bad because the balance sheets are bad about the bank. And finally, we have the stock exchange. Same. See, everywhere the volatility is there, and we cannot say this is better, that is better. It depends upon the risk appetite, the conviction level each person has on that particular instrument, the investing instrument. He can say real estate is the best for a people who's really seen money in real estate. A person who's really only invested in gold. See, I've seen many of my friends who always go every month, they save and they buy 8 grams of gold. That's one thing, and they bring it home and they keep the coin every month. So every month, one coin adds up to the tally. So these fellows have won huge. That's what we always say. And when we 1995 or 1990 had 1 kg of gold, you could have bought one Maruti. Today, you can buy a Rolls Royce. That's the difference of 1 kg of gold, which makes in 1990 and today. So, in a long run, everything appreciates. For that sake, if a person wants to know if he had invested just 1 lakh rupees in a share called Infosys in 92 or 93, today the amount he's looking at is even bigger than the gold and the real estate. That is the returns he would have got. So, on the long run, yes, all the instruments are safe. They will give you a good return. But when to invest, how to invest, and where to invest is a question which we always have. And now, leaving the other three, because I am a specialist in stock exchange, I will and share market. I'll come to my area of expertise. The first thing which you will have to understand is, viewers, let first ask yourself one question: are you an investor or a trader? See, this is one major question you've got to answer before coming to the stock market. So if you're going to tell I'm an investor, again, I would divide that into two. You have called something called active investor and passive investor. The active investor buys for a script, keeps it for 1 month, 2 months, sells, again buys. So he keeps his money rotating in the stock market. A passive investor happily just buys some script, puts it in the DMAT account, forgets it. After 10 years, he sees it to be a real good gold mine lying there for him, which he can just go sell and make money when there's an emergency also. See, that's one thing again, Gren, I would like to touch upon. When you have an emergency, you can sell these shares and you can make money and just walk out. In other instruments, you're locked for some time. You will not see for real estate, it won't go for the price which you think immediately. You'll have to wait for some time for get an immediate buyer and then sell all these. So each one has its own pros and cons. So the stock market, when you're a passive investor, you can just buy and you can just put it in your DMAT account and you can just leave it for some time. Say 5 years, 10 years. It'll give you huge returns, believe me. Because that script multiplies.
Sorry, Ram, I
Yes,
just have a question. Now, the perception that people have is that, yes, I mean, as you said, all the instruments are equally a good investment depending on how long you want to hold your principal, right? Now, the perception in people's mind is that the stock market is a big risk. Now, even my portfolio, some of the shares have gone bust, right? They're zero. While some shares have done appreciably much like 100% and 75% growth on those shares year on year is in the other shares. So there is an upside and a downside in the market, which you could possibly lose all your investment if you put it into the wrong share, right? That is always a risk in the share market, no? So how do you say that the share market is as good an investment as the property or the real estate? I mean, the property or the gold?
perfect. And actually, I was going to come to that the next thing. See, when you're a passive investor, see, always you don't take every company to invest because there's almost 3,000 plus companies in the National Stock Exchange which is listed. So what we do is when we talk about a passive investor, we talk about something called blue chip companies. So these blue chip companies are companies which have been performing for the past 15, 20 years or even 50, 100 years. Like Tata companies, the Tata groups, we know it's been there for so many years. And the Birlas, because when we were studying, we used to tell, well, what do you want to become like Tata and Birla? See, these were the two names which we always used to immediately come as a break of a moment, we'll tell them. So these business houses, you can just go invest in their businesses and you can just keep your shares aside and you can just walk it through. As I was telling last week, the Hindalco shares of Kumaramangalam Birla's group, I have one customer who has invested in 1994. he invested 1 lakh in Hindalco. And today, if you take that portfolio, is almost 70, 80 lakhs. I really don't know what kind of appreciation it is. How the share market gives you is they give you bonuses, they give you, they split the share, and they just goes on multiplying. They give you dividends. So this is the way you make money in the share market. So when you're a passive investor, I will always advise you to go on for blue chip companies. Don't look. See, that's why I always tell the noise around us is so much that we get carried away and we invest in some small cap or a mid cap. All this I will come later, Gren. We are not, when you're a passive investor, you cannot afford to invest in a mid cap or a small cap because there is a certain amount of risk involved in that.
Okay.
When you're a passive investor, 100% you have to go with the blue chip companies or the large caps, the first 50 companies of the Nifty 50. These fellows have proved it for a period of the horizon that they are consistent performers and they will give you good returns. So this is for the passive investor. When you come to an active investor who trades like every month, he just buys for amount of portfolio. Then after 15 days, just checks the portfolio. If anything is increase, he sells it, makes money, and again reinvests. For this person, I can say he can take a little amount of risk. As we discussed last FB Live, also you can do some fundamental analysis about the sector, about the script, about the management and everything, and you can select the script and you can go ahead. See, in the short run, there might be some companies in the mid cap which are doing really well. For example, the chemical sector today is doing extremely well because of the Atmanirbhar Bharat scheme of the Prime Minister and the other schemes, the PLIs which have been linked to them. They're doing extremely well, and you can go and invest in some of these scripts which you think is really performing today for the short term. But when you're an active investor, again, friends, let us understand you will have to review a portfolio at a given interval. You cannot just let it lie idle. As Gren told you rightly, you would finally end up one day seeing a script going to zero if you're putting it in the mid cap and small cap category. Blue chips, of course, you're rest assured that your investment is safe. But when you come to this category, there is a certain amount of risk involved which you have to evaluate before investing. So when you're an active investor, this is what you have to see. But if you're a trader, believe me, 9 to 3:30, you have to sit in front of your screen. You cannot go anywhere. Because trading involves day-to-day activity and trading needs technical analysis. Without technical analysis, you cannot do trading. The fundamentals alone will not help you do trading because you will surely lose somewhere. 5 times you may be lucky, but 5 times you may be unlucky as well. But if you do the technical analysis, so I don't say that you'll be 10 times lucky. If you do the technical analysis, 8 times you'll be lucky. Twice you will, I will not say you will be unlucky, but you'll be caught in the script for a longer duration of time. So you would have planned to encash it in 1 week, where you would be held up for 15 or 20 days, even 1 month. So the duration of the holding of the stock will be more. So if you are a trader, decide and come in. You have to sit in front of your screen. You have to do the fundamental and the technical analysis. You will have to do everything, and then only you can be a trader. So what we normally tend to advise people is the professionals and the working employees and the higher level management. You are already involved in your business. This is our business. We will help you multiply your money, which is lying idle in the bank account. We will give you a definitely better return than the bank account. That's why we are here, and we are traders. I am 100%. I'm a trader. I am 9 to 3:30. My calendar is blocked. I don't give it to anybody. I don't give it to my family. I sit in front of the laptop. I see my screens running. I have 2 mobiles, so all the screens are running with the scripts. So this is what we do. So this is as far as the investment is concerned, Glenn.
Oh, that's really interesting, Ram. I think that makes a lot of sense. Now, when you are talking about opening new accounts, right? You were saying that we should also consider that as part of how do we go about opening a DMAT account, and what are the risks involved as well as the costs involved that we do not consider when we are doing or starting up a whole stock market activity, right? Investing in the stock market. So, what would you advise in that front? How do you go about setting up yourself to trade?
See, Gren, like again, for the viewers' sake, when you are there are 2 types of accounts which you will have to open when you are doing a share investment. One they call as a DMAT account, which is held by NSDL and CDSL. These are the 2 institutions which help you open the DMAT account. So only these fellows are entitled by SEBI to open a DMAT account. Nobody else can open a DMAT account. Let us understand this first. So when your broker, for example, any broker, for say ICICI Securities or HDFC or Axis Securities, or when it comes to private sector like Motilal Oswal or Zerodha, all these people will have to go to NSDL and CDSL to open your DMAT account.
Okay.
So once your DMAT account is opened, what you open with all these trading houses is basically a trading account, not a DMAT account. So let us understand, you have one trading account and one DMAT account. So if you're a passive investor, viewers, please take this advice. If you're a passive investor, you don't have to have a trading account at all. You can directly go buy your shares and put into your DMAT account, because you're going to keep it for 5 years, 10 years. You're not going to sell it before that. Your time horizon is huge, long. So you don't have to even go and open a trading account. You can open a DMAT account where you can directly start buying the DMAT account and just keep it. Only when you're a passive investor or a trader, this trading account comes into question. Then you'll have to open the trading account with your trading house. You will get all the signatures. So you can ask me, sir, when I buy the shares and I take delivery, where does it go? See, your the scripts that taken when you take delivery, it is not with the trading house, it goes to your DMAT account. So when you tell, tomorrow you tell Motilal Oswal or your ICICI Securities to sell this share. I want to sell 100 Infosys. So what happens is, Motilal Oswal cannot sell your shares. Let us understand this. There is something called power of attorney. These fellows, when they come to open the trading account, he will give you a small document and tell sign here, sign here, sign here. So you just go on affixing your signs. But you don't know what you're really signing. You're signing the power of attorney, where you give the power to that particular person to take the shares from your DMAT account.
Okay.
Your trading house has no right to touch your DMAT account. It is only you who is authorized to touch. If you are not there, any eventuality happens, your nominee can, the executors of the bill can go and take hold of the DMAT account. But here in the trading house, what you do is you execute a power of attorney, where you tell them, I give you the authorization to go take the deliveries from this account. So you can have one DMAT account and 5 trading accounts. No problem. That is also possible. You can tell your trading house, I already have a DMAT account, link that account with this. But what happens here is, every trading house tends to open their own DMAT account. So when you open 5 trading accounts, you have 5 DMAT accounts. It's not needed at all. So one DMAT account is enough. The amount of trading accounts, you can have n number of accounts here. That does not mean anything. And when you sign the power of attorney, please check the power of attorney of what power you give them. Don't give them excess power to use your account. Study the document, clearly check what is there. Or go to an expert like us and ask them to advise you of what is there, and tell them to read what is there. Because normally what happens is, I don't blame the trading houses in any way, but in the previous, some incidences have happened where customers have been on the receiving end. That's why I'm telling so much. Even a few days back, I don't want to name the brokerage. One of my customers, he wanted to shift from the brokerage to me. Finally came and told, sir, all my shares have, all my money is taken and been invested. When we go and see the money, actually he had only 50,000 rupees. But the 50,000 rupees today has become 20,000 rupees.
Wow.
So the share value is come down. When we go and ask the trading house why this has been done, the executive says, sir, please don't make this a big issue. I'll lose my job. I'll give you the 50,000 rupees from my salary, next month's salary. See, these are certain mismanagements which are happening in the trading houses, which I've personally seen in front of my eyes. So when you execute the power of attorney, please check what you are really executing, because people can take you for a ride in this if you don't read that document. And once you are through with the document, and once you are given the power, so what happens is, when you place a sell call for 1,000 Infosys, the trading house will go and tell, my customer wants to take delivery of 1,000 Infosys, please give. So he will place the sell call for you. You will not place it directly with NSDL or CDSL. Your trading house will do it for you. So this is what happens when your trading house comes into play. So basically, a trading house facilitates the opening of the DMAT accounts easily. That's the place where these fellows come in and they really tend to do it. For which they charge a professional charge, which we can pay. So this is the actual process involved. This is what I wanted to highlight because the last 1.5 months, I've seen a lot of customers and a lot of cases coming to me where we are really undergoing pain when we go to the trading houses because the power has been given to them. And other incidents I can give you. For example, you have not paid your AMC, 500 rupees or 800 rupees. What the trading house will tend to do is he will send you a few mails. Finally, he will self-share and adjust it across the counter. Okay. Your DMAT account, because you give the power of attorney to him. He will directly sell 1 or 2 of your scripts and he will make up for the money and he will tell it's adjusted towards your AMC, sir. You will not know it at all because you are so busy that in your schedule you would have missed this email itself. Finally, we see there will be 2 shares or 3 shares reducing in your portfolio. If you go finally check the account, it would have been adjusted in this. But if you check the previous history, this fellow would have sent you mails, which would have just overshot by mistake. So these are all the pitfalls which we tend to face when we open a DMAT and a trading account. So friends, let us understand there are 2 accounts. One is a trading and one is a DMAT. Let us be clear. And when you open it, be very careful with whom you're opening. And trading houses, for a passive investor, again, you can go on for trading houses like ICICI, HDFC and all, because these are bigger trading houses. The volumes are large. Their charges are a little bit higher, but they are very, very safe houses. You can depend on them and you can put the scripts inside. If you are a regular trader, I would suggest you go on for the people like Zerodha and other things where the charges are lower because the volume is huge. You can't afford to pay the bigger trading houses that kind of a charge. But today, given in today's situation, all the trading houses are revising their schemes. Actually, I know one big trading house which is revising its scheme right now. So I think it should be done in another 2-3 days, which we will get it officially. So all the people are realigning themselves to the new entrance into the market. Yeah, Green.
So that makes a lot of sense. I think you gave a lot of information in a short period of time. So I was actually digesting all that you told me. So I have maybe a very layman question about my understanding about the share market. Okay, so bear with me with this stupid question. Now I have a DMAT account, right? So say I gave the power of attorney to a trading company. So how could my shares come from 50 to 20,000 unless he's taken my shares and he has put it into a script that has made a loss, right? That's the only way it could go from 50 to 20. Is that my understanding? So he's mismanaged my investment. That's what you're saying. So they can't take my money and run away with the money. That's not possible, right? Is that possible?
That's not possible. He cannot run away with your money. But what he can do is, if your money is lying in the trading account, he will buy some scripts which he thinks which will flourish in the short term. But to his distress, the scripts will come down. So one fine day, when you go and see the 50,000 rupees, it will be 20,000 rupees. So if you question this fellow, it's a huge issue actually. It's a question of integrity where he can even throw this fellow out, but he will come running to you because his job is at stake. And I literally got his salary and gave my customer. This happened, and I closed the trading account with him. I told, no, boss, let us not have this. Not even a boss, she's a lady. See, if a lady does this, I can't go scream at her because whatever said and done, the week is 6. I tell her, okay, fine, lady, you just close the account, slowly settle him. 2 months, he gave half, settled the account, and the issue was closed. But this is just one issue which I'm telling, but a lot of investors have been losing money like this. Mismanagement by some of the like the employees of the trading houses. I don't blame any trading house. This is because of basically the power of attorney given to them. You give the power of attorney for them to buy the scripts on your behalf. So you go and tell them, he will show you the document and he will say, sir, I have the document. You have already authorized me to buy. So you have no way you can go claim your losses with anybody.
No, I get that part. I totally understand that part, Ram. My only point was that I was just trying to make sure that everybody is clear that yes, I mean, while they can mismanage your shares and you would have loss-making investment, your money is not going to be unless there's a scam that they can run in such a way that they can take off and siphon your money. That is not a possibility per se, right?
See,
so
that again, Gren, over a period of time, it's evolved. Like your DMAT account will be linked to one your trading account will be linked to one savings account, only one savings account.
Okay.
You might have 5 savings accounts. You just try transferring one from the second savings account to the DMAT account, it will not go. The money will come back to you. Only these linked accounts can be transferred. So that way your money is safe, but it can be mismanaged. That's what is the bigger problem.
That I understand. So the whole part, the reason I'm trying to bring it up because we're getting close to the end of this half an hour. So just to make it clear to everybody that's on the call, okay? So I think what points you said are very valuable. So I try to quickly summarize. Tell me if I've understood in a layman language what you told us, right? So one is that when you're starting it up, first make sure that you make a DMAT account in a proper organization, a reputed organization, that you have a proper DMAT account. That is a critical, I think, the crux of the whole starting point, right? And second, when you're going for a trading account, you don't necessarily have to have a trading account for every trading account, a DMAT account. You can link multiple trading accounts if you so want to do that to one DMAT account. So you can save the DMAT charges as well, right? So that's one way of looking at it. And when we are giving the power of attorney, the main important thing is to see what are we really giving away as an authority to the trading house, right? That is in crux, I think, the biggest thing that we should focus on at the time of opening an account. Now, the part about, as you said, the long term and being a passive or an active investor is the second part of the activity once you really start getting into trading. Either you are a trader or you're just an investor and you just sit back and watch your shares grow is an approach you take to the market, correct? Did I summarize it pretty okay? I was just trying to make sure that I bring it into layman language that I understand it.
Perfect then. So next week, what I would be really doing is last week itself, I promised on the risk management. So on the risk management, what we're supposed to talk, as we discussed a little bit, really, well, just a 0.1% about the blue chips or the large caps, then the small caps and the mid caps, and some fundamental analysis of the risk analysis. I would, if I have the time, I will touch upon, but I will go on this in brief because you can have a real understanding. As a passive investor, you can sit in your laptop in the evenings, you can do your homework even in the weekends. For IT professionals or working professionals, the weekends you can sit, you can make up your scripts. In the Monday, you can just place a call and leave it. But again, the only point I want to make is, viewers, if you are a passive investor, a trading account is not required because again, you're paying charges for that as well. So just understand the charges because they charge you 0.3% on the turnover. That's huge. It may change 0.3%. But when you're talking about 10 lakhs of 0.3%, just imagine how much you want to pay a month. That I think is quite a huge amount. So let us be clear with what we're talking about in monetary terms. Let us not talk about just numbers. The quantum you'll have to see what is going out of your hand.
Ram, thank you again for sparing your time. I mean, I appreciate that while you are a portfolio manager, you are sharing so much of knowledge for people to actually manage their funds themselves. That shows a very selfless approach from your side. While you are not saying it from your side, I will tell all the people who are watching this video, I've invested with Ram and made sure that he's managing my portfolio and he's done a pretty good job at getting me decent returns. So I would request you to reach out to him if you're interested in a portfolio manager to get your portfolio really expanded and the right returns with a minimal risk that, of course, there's no investment without a risk. So that's my recommendation from my side as an investor in Ram till now. So take it from me. I think you should seriously think about that as an option. Anything you want to say, Ram?
Thank you for that excellent feedback. And thank you, viewers. I will again meet you next Monday at the same time. Thank you and signing off to them. Bye-bye.
Yeah. So on behalf of Ram and myself, this is Grenville, business planning coach. We do this every week at 9 p.m. on Mondays. Focus exclusively on the stock market and how to go through managing the stock market as a layman from our side. Take care, stay safe. See you next week.